Hello, welcome to the European Open Briefing for Tuesday, November the 14th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. Most major pairs are relatively steady this morning. The dollar is broadly flat. We have a number of key US data releases coming up this week, though much of the focus remains on the tax plan and its progress in Congress. The UK pound fell sharply yesterday. It has managed to rebound late yesterday, early this morning. It is somewhat steadier, but could come under further pressure as Parliament in the UK begins debating the EU withdrawal bill. That's going to be seen as a big test for Theresa May's leadership. The Australian dollar, although it has managed to find some support from strong Aussie business confidence data, it is overall being weighed by disappointing Chinese indicators. Though the euro is doing rather well this morning, it has managed to reclaim the 1.17 level against the dollar following better than expected German GDP numbers. Let's begin first with the dollar. We can see both the dollar index and dollar yen. They are down from those highs earlier in the month. Though we can see dollar yen has jumped higher at the start of European trading. Currently trading around 113.80. The dollar index is somewhat weaker though, at around 94.42. That's mainly due to a rebound in the euro. Later today we've got producer prices coming up, and tomorrow we're going to have CPI and retail sales figures, and on Thursday import-export prices and industrial output figures, and then on Friday some housing data. Fed Chair Janet Yellen will be participating in a panel discussion at an ECB conference later in the day, so she will likely attract some attention, though much of the focus remains on the tax plan. On Thursday, it's likely that the House of Representatives will get to vote on their version of the bill. The Senate's final version of the bill will likely come together with the Senate vote after the Thanksgiving break in the US. So the next 2 weeks are going to be crucial in terms of whether or not the tax plans will go ahead. But something else that's causing some anxiety in the market is the fact that US yields are flattening, with short-term yields rising and longer-term yields not keeping up with the increase in short-term yields. The last time spread between short and long-term yields was at its lowest was in 2007, just before the financial crisis. So this has raised some eyebrows, though overall the outlook for the US economy at the moment, at least, remains very positive. Let's move on to the pound. We can see sterling tumbled from last week's highs on Friday. It had jumped higher following very impressive industrial output manufacturing figures. Yesterday it did touch a one-week low, 1.3060. It's currently trading around the 1.31 level. The UK political risks are once again in the spotlight. It was reported on the Sunday Times over the weekend that Theresa May's leadership is under increasing scrutiny. 40 MPs are reportedly ready to sign a no confidence vote. We've had 2 ministers resigning already, and not enough progress yet on the Brexit talks. Still stalemate there, with no agreement, or the talks haven't yet progressed to discussing a transition deal or a trade deal once the UK leaves the EU. So that's worrying businesses and investors. We've had other developments as well. 2 cabinet members, Michael Gove and Boris Johnson, apparently writing to the Prime Minister demanding a hard Brexit. So all of that has raised the political uncertainty in the UK that would likely restrain the pound for the next few days at least. Today's the EU withdrawal bill begins. It's being debated in Parliament today. That could take several weeks before all the amendments are discussed and the final version is put to vote. The government has already considered and said that MPs will get to have a final say on any EU deal. So that's been one of the efforts in trying to appease the rebels within the Conservative Party. So there is a lot of risks ahead for sterling, depending on how that bill is going to progress, as well as what's going to happen with the Brexit talks. The euro is doing well this morning, though. We can see it's shot up. At the start of European trading, we had German GDP numbers beating expectations. German economy grew by 0.8% in the third quarter versus the flash estimate and the forecasts of 0.6%. We're going to have the second estimate of Eurozone GDP coming up later as well, plus the German's new business survey, although the big focus will likely be on that ECB conference in Frankfurt, where all key central bank heads will be speaking. There's going to be a panel discussion being attended by Janet Yellen, Mark Carney, and Bank of Japan's Haruhiko Kuroda. Kuroda already spoke early in the day. He said that the Bank of Japan will continue with its powerful monetary easing for some time yet, as inflation remains well below 2%. He wants to see inflation on a sustained path or above 2%. Early in the day, we had Chinese data, which was somewhat disappointing. We saw industrial output, fixed asset investment, and retail sales coming slightly below expectations in October. Property investment growth also slowed sharply from 9.2 to 5.6% in October. All of this is down to the government's efforts to curb risky lending, as well as implementation of tough pollution controls, all of which are having an effect on growth. The Aussie and the Kiwi were both hurt by that data. The Aussie has slipped to a 4-month low, the Kiwi to a 2-week low. It did touch 0.6843 earlier, currently trading above 0.6850. The Aussie has found some support, though, from very impressive the NAB business confidence data. The NAB business conditions index jumped to a record high of 21 in October. That's somewhat in contrast to some recent mixed data out of Australia, and although it has provided support today, it could be an indication that Australian growth will exceed expectations in the coming quarters, which could potentially be positive for the Aussie. Though for now, the Aussie is at 4-month low against the dollar at 0. It did hit a low of 0.7607 early in the day. Oil prices are rather steady, although the rally has appeared to have lost some momentum. There is strong support for oil prices. Yesterday, OPEC said that it is raising its forecast for demand for OPEC oil for 2018 by 360,000 barrels per day, compared to its previous forecast. The loonie, though, although it did manage to come off its lows in recent days, it hasn't seen as much of a boost from oil prices. The NAFTA talks, the renegotiation of those talks, and the possibility of the US withdrawing from NAFTA is still weighing on the loonie. The 5th round of those talks will start on Friday. We also have Canadian inflation data as well on Friday. And ahead of all of that, the Kiwi is weaker this morning, with USD CAD rising to around 1.2740. The USD CAD had found support around 1.2650 at the end of last week. So we should potentially see some volatility towards the end of the week. Looking at today's economic calendar, we can see the UK inflation numbers coming up later in the day, as well as the ZEW economic sentiment index out of Germany, the Eurozone GDP, industrial production figures, as well as US producer prices for October later in the US session, and of course that panel discussion by the big 4 central bank heads that's expected to start at 10 GMT. That's it from me. Thank you very much for watching, and have a great day.